Do you want 20 stock ideas for 2026? Do you want to see how Drew and I are investing with our fake money portfolio this year? Well, you're in for a treat in today's episode. I'm joined, as always, by my partner in crime, Drew Meredith. The financial planner kind of dusts off his old cap, his professor's cap, and makes some predictions about interest rates. And what's really interesting is we recorded this episode about an hour before the Australian Reserve Bank met and made its decision to lift interest rates. So one of the glories of podcasts is that you'll be able to see how wrong we can go. But as you'll find out in this episode, we didn't bet the house on it. We talk about the implications of rising interest rates across 2026, how you can position your portfolio, and all of the things that really matter this year. So if you're into high signal, really compelling companies and stock ideas, this episode is for you. And if you like it, don't forget to subscribe to the Rask YouTube channel because we're doing this every week, not just Drew and I, but heaps of episodes. Hope you enjoy this episode of the Australian Investors Podcast. As you know, Term Plus recently came on as a platinum sponsor of Rask podcasts, and I invested a small amount myself, $2,000 to be exact, to get a feel for it. After all, I couldn't tell you to consider it if I hadn't at least considered it myself. And the result is it's a very, very good platform. It's potentially the simplest technology platform that I've come across in Australian finance. And what makes that extra special is, behind the scenes, something very sophisticated is actually happening. Term Plus is investing your capital in a globally diversified and professionally constructed portfolio of private credit designed to produce attractive and reliable monthly income. Aside from providing passive income, what really attracted me to partnering with Term Plus now is potentially falling interest rates. Because Term Plus starts by targeting 3% returns above the RBA cash rate for a 1-year fixed term account, there's a buffer in place even as interest rates fall. Monthly income can also be paid directly into your bank account or reinvested for compound returns. I see Term Plus as a really neatly packaged way for retirees or even accumulators like me to get exposure to professionally constructed global private credit portfolios. You can find out much more information and grab a hold of the PDS and TMD at termplus.com.au. If you want to just check out the website, you should also know that there's an instant chat function for questions, which is really important and I find really handy before I invest in anything. Don't forget to tell them Rask sent you. And as always, consult a licensed and trusted financial planner who can take into account your financial goals, needs, and risk appetite before investing. Welcome back to 2 Cents, first installment of 2026. Joined by Drew Meredith, who I haven't seen for 6 weeks. He was off the coast of Madagascar for a few weeks, just sunbaking in the glory of his stock picks from 2025. And now he's back very tanned. How you going, mate?
Very, very well. Didn't manage to win all the bets. If you follow us on the retirement podcast, lost the CBA bet quite poorly, but snuck it. It feels like we could be in trouble this year though with all this new competition.
Yeah, well, we've got the stock game is alive and well. This is the first 2 Cents edition of 2026. So if you're new here, this is our Saturday morning show. Every Saturday, Drew and I answer some of your questions. We talk about what's happening in the news. But this year, we're also taking stock of what's happening in the Stock Genius leaderboard. So this is our game that if this is your first time listening to the podcast, unfortunately for you, you can no longer enter because we sent about 500 emails, 50,000 social posts, and so on and so forth in the months of December and January to everyone that is a loyal reader of our newsletter and related kind of platforms to say, hey, you need to get your stock picks in before the 1st of Feb because that's when we're going to start tracking the game. As at the time of recording, Drew, Crypto Short, whoever that is,
game over,
is already up 23%. So one trading day in is up 23%.
Got to be short something. Who knows what it is?
Aqua 96 is up 12%, and Rohan,
I don't even want to know.
or maybe Rowan, is up 8.95%. So those are the top 3.
We do remember
out of a few thousand.
The community portfolio, went hard early last year. We were both very nervous in that first quarter.
Yes,
it doesn't take much to change the direction. Yes. I'm positive today. I'm in the green. I'll take that.
You can view the leaderboard at stockgenius.com.au. That's stockgenius.com.au. That will take you to the leaderboard of over 2,000 people that are playing the game with us. So if you missed out this year, totally fine. There will be more games and things that we throw, maybe even this year. So don't forget, like, you can sign up to the Rask newsletter by just heading to rask.com.au. Put your information as the email. That is the best way to stay up to date with what we're doing. So I actually wanted to check back on one thing, because last year, Drew and I played a game where we had $10,000 invested, fake Navexa dollars. Navexa track your portfolio at navexa.com.au. And we had 10 positions and $10,000. There was your portfolio, my portfolio, and the community portfolio.
Now, the balancing wasn't...
At the very end of the year, at 31 December 2025, we tracked that all throughout 2025, and Drew had won, right? Because at
by
that date...
200 basis points.
He was ahead. Turns out...
You're still tracking it today.
Drew is no longer ahead. And yours truly is ahead.
This was a 2025 portfolio challenge.
And I would just like to say that long-term investing is more than 12 months. But
it's 80 basis points.
So in the case of the 2026 stock market game, dear Drew, the game will finish at the end of this calendar year.
Never finishes.
So whatever will be, as they say. We have some, great performance out of the gate by some people. Jamil in our office was just saying that he was up 5%, and then he woke up this morning and he was down 5%. So I don't know what he's got in his portfolio, but I think people are really swinging for the fences. So it's going to be fun this year. Now I'm just going to check my portfolio. If I search for my name here on the
So often the winners
website,
of these end up just finding a takeover offer. Like, I feel like it's hard to run momentum for a whole year. That, crypto short, gold short might work for 3 weeks, but whether that continues for the whole year. And so much comes down to if one of your companies gets taken over or a real rotation happens.
It does indeed. So I can report for everyone here that if 1,000 people beat me in the community portfolio, the stock market game this year, if 1,000 people beat me, Drew, I'm getting a tattoo. And if 2,000 people beat me in the challenge, I will get it in Old English font, which for people of my vintage was the preferred font, alongside barbed wire tattoos around their arm, Maori looking tattoos, even though they were pasty white, these types of things. So I'll be honouring the game with that risk. But at the time of recording, Drew, I am at position 1,176. So I am firmly in tattoo territory.
Where do I find that?
You can search the stockgenius.com.au website, top right corner, just search for your name. And I can report that my wife is actually beating me by 500 positions. So she is at 657 at the time of recording. So a few people have chosen the Rask moniker, but mine is Rask. That's R-A-S-K.
Oh, there's views.
Someone has Owen Rask, which is not me. So just keep that in mind. Owen Rask in the game is actually not me. So
that's a stitch up.
That's a stitch up there. Just a bit of light impersonation. What is yours, Drew?
I'm up nearly. I can't find where I sit on the rankings for some reason, but I'm up just under 1%, which means I'm.
But what's your participant name in the game?
I think it's just Drew. Is it Drew Meredith or is it D Midi maybe?
So I've got Drew Meredith.
Instagram handle.
What did you say you were down?
I was up 0.9%, I believe.
Oh, okay, because there is a Drew Meredith, and it is down 0.98%.
Maybe that was yesterday?
Yeah, it updates every 6 hours on the public scoreboard.
Oh, right, yeah. So I'm up this morning as of market open.
Okay, and then there's also a Drew. So
no, it'll be Drew Meredith.
Okay, yeah. So you're
or Andrew Dermouth.
Yeah, not too bad.
Surely no one's put Owen Rask and Drew Meredith that aren't us in both of them. That would
so
be a little strange.
People, it's a full stitch up.
Yeah. Okay. Someone from a competing financial advice firm
that's trying to bring us down. Okay, so this is great fun, right? And this is what we're going to be talking about this year. We'll probably get some of the winners or leaders on the show. We'll probably get some of the big losers on the show as well. But yeah, if you do want to write into us and send us your questions, you can do that via the link in your podcast player or YouTube description. Just head down the bottom there, and you'll just go to the thing that says ask a question, select the Australian Investors Podcast, and we can go from there. You can also use that same link if you do the question link. Just give us banter and tell us how good your portfolio is performing in the game. Anything that goes through there is very much welcome. But if you did select, say, the Australian Finance Podcast by mistake when you fill in the question, your not so wholesome message will end up on the Australian Finance Podcast. So maybe don't select that. All the banter comes through to this channel. Thank you very much. Drew, what's in your portfolio?
I'm looking back at it, and I think maybe when I did this on Saturday night, it wasn't, with the most coherent portfolio I've put together. But like last year, I viewed this, I think you did as well, as not your core portfolio, like a satellite portfolio. Yep. So I've got some things with a bit of heat in there, with a bit of growth potential.
Yep.
I've mixed up some stocks as well as some broader ETFs.
Yep.
I might start maybe we'll start the boring end first. Go with the stocks first.
Sure.
So this one you might be surprised with is GQG, the
stock
management company, the stock.
Yeah.
Which I think, if people don't know, it's one of the biggest fund managers or fastest growing fund managers in the world, but has underperformed the benchmark for 18 months now on the sole premise that they don't want to hold any tech at the moment. They believe there's an AI bubble. So as a result, the share price has fallen due to the underperformance because they expect outflows to come. So this is kind of a hedge against tech falling, because I know that this is going to be an anti-tech now. If tech falls, GQG is going to do better.
Yep.
So I've used this as kind of a potential hedge in my portfolio other than cash. Solpats. I think Solpats is significantly undervalued.
Do you really?
So, SOL, yes.
I own Solpats.
Yes. Good one for you too. Yep.
Yep.
Also, we've been talking about Solpats with our clients as well. WiseTech. So I haven't initiated my personal position yet, and I feel like this could be better.
Are you just copying my ideas?
I hadn't seen your portfolio. I actually hadn't watched your video yet.
Oh, that with Navexa. Okay, yeah.
But this is perfect timing, I think, because the tech sector, someone put up a list of the worst performing companies since 1 January, and it's all tech. It's like the perfect time to be executing a tech position.
Yeah,
I want to buy this personally. I haven't had the guts to do it yet, so my way to get in there. A fallen angel, hopefully, in CSL.
Is that because you're just trying to get retiree clients?
No, it's not.
Waddle partners?
It's not. There's not many times that a top 10 company falls by 40% in a very, very short period of time. And if you look at what's happening, every time we see volatility, concern about rates, as we're seeing again, healthcare and consumer staples become the big winners. Yep. So I'm seeing this kind of potential re-rating, and the catalyst for big companies are much quicker than smaller companies, in my view.
Okay.
And the other company, completely left field, talking to a client, a long-term client based out of WA, is Ingersoll Rand.
What? What?
You got to throw something in there. You never know what's going to happen.
What is that? It said
part of its business is
I'm going to Google this.
Air compressors. And it's got, I believe...
Oh, I've seen this brand before.
Yeah, untapped.
Ingersoll Rand. New York Stock Exchange, IR.
Yeah, so there's a bit of a theme going on in my portfolio.
$35 billion market cap US.
Yeah, I feel like the couple of themes for this year are likely to be the extension of AI and the picks and shovels that go with AI, if you want to talk about it a very simple way. Ingersoll Rand does air compressors, then you need obviously clean air within data centers.
Whoa. So you're tying this back to AI
yes,
theme.
Yes, I am. It's an AI portfolio. You can long this portfolio anytime you want. Yes. As well as generators and a few other things as well.
Okay.
So it's not just that business, but I thought that was super interesting. And it's already up 3%. How's your portfolio doing?
Yeah, not
everything green. Yeah. And then I thought one of the big underperformers in the latest kind of tech rally has been Amazon. And I feel like there's untapped kind of potential sitting in Amazon, particularly over the next 12 months or so. And we'll find out very soon. I don't know why I put in a major tech company the week before it reports, but this is what happened last time. Tesla fell 40%, took the whole year to get back to 40%, but came home with a wet sail, and I'm hoping for the same thing again.
Okay.
So Amazon was the other stock.
What's with that?
Then a couple of ETFs.
What's with the Amazon position?
What size?
Like why? It's a $5,000, because you get $100,000 in the game for people that don't know. So that's a 5% effectively, 5% position to
I
start.
do all my direct stock holdings at 5% for diversification purposes, and then load up more of my ETFs.
Oh,
given
right.
they
So
offer a bit more leverage.
Ingersoll Rand, Amazon, I'm just looking at it now, WiseTech, Solpats,
GQG.
Yeah, CSL, GQG. Okay.
From a position sizing perspective, you don't want one stock to blow you up.
Yeah. Okay.
Essentially, is the way I try and think about it.
Yeah, for sure.
Not like you're leveraged.
But why Amazon? Why did you put Amazon in there, not Microsoft or Google or one of these other ones?
I thought Amazon has missed out so far, but has one of the best business models and I think the most untapped growth. Alphabet I would have added, but Alphabet's had an incredible run to finish 2025.
Yeah.
So what could win this year? I think it's Amazon.
So you think it's like one of the of the Mag 7, it's one of the unloved ones?
Yeah, at the moment.
Okay, and then you've got a bunch of ETFs. You've got fuel.
Yes.
You've got
I'm trying to add a fuel on this
GPEQ.
fire. Yeah, add a bit of fuel on the fire.
You've got Asia, which is the beta shares Asia Technology Tigers ETF. You've got DTCR, which is a NASDAQ listed ETF.
Yeah,
what
so
is that?
DT, this is continuing that play, is the Global X US listed. I didn't know we could do this. Data center ETF. So I was looking for an exposure to data centers for 2026. But a lot of like AI infrastructure, all those end up being more energy. So I think AINF has Cameco, the big uranium, and that's not what I wanted up in this. I wanted actual data centers. So that's a data center exposure. Asia Tech Tigers. I'll blame Kev Tui for this one if it goes wrong. But
after his form with KKR last year. Well,
but this is like tech on tech, Asia tech on tech. So it's done exceptionally well already. Nowhere near as well as what the US tech's done for the last 5 years. But this is a play on that AI build, the cloud computing, the expansion build in China, mainly in China. But you get Samsung, SK Hynix, Korea, all those kind of companies in there as well. GPEQ, in hindsight, probably shouldn't have put it in.
What is it?
Listed private equity.
Oh, is it? Right. Okay.
So it's like a diversified KKR.
Oh, is that the Van Eck one?
Yes. Yeah. So it's like invests into the private equity companies.
Like
private
KKR.
markets, So if SpaceX, these companies all list some of the funds that this is invested into or companies invested into probably do exceptionally well.
Right.
And the one looks the most interesting. It's rallied more than I thought before we managed to start these portfolios is fuel. So it's like GDX, but for oil and gas.
Okay.
So you saw oil prices tanked at the end of last year. Gas prices tanked. And this is another, I'm calling this an AI play too.
So you're basically giving this,
themes.
If I could sum this up, I'd kind of sum this up as like the rebound portfolio.
Yeah, I call it the AI portfolio if I could.
Well, CSL's been absolutely smoked.
Rebound,
WiseTech's been smoked.
Sol's been smoked.
Sol's been smoked. GQG's been smoked. All the private equity companies got hit pretty hard. Fuel got smashed.
Are you saying this is my falling knife portfolio?
Amazon's not done as well as the other tech stocks. So the things that have done well are data centers, this IR thing I don't know much about it, in RAND, whatever it's called, and Asia Technology Tigers, like the emerging markets technology stocks started to come back last year.
I don't think about it that way, but yeah, maybe it is. Maybe it's the falling knife portfolio. We're testing the falling knife strategy in 2026.
If you're trying to win a 12-month stock market game, which is incredibly short term.
It's either a takeover or a turnaround.
The reason that we did 12 months, for everyone's understanding, is just because it was kind of the longest attention span we could get for people without them being like, oh, my portfolio is shit, and then stop listening to the podcast. And just give up on the game. Versus like the ASX stock market game, which is, I don't know, it's measured in weeks.
8 weeks or something.
Yeah, and it's horribly short term. It encourages myopic share trading behavior rather than actual investing. But at least it teaches some people. So ultimately, like, we wanted to stretch out as long as possible. But 1 year is still short term. All the data suggests that over 3 to 5 years is when actual company performance is the explanatory variable in stock market returns. That said, there's every chance that your Momo portfolio, your momentum, your
reverse momentum,
reverse momentum portfolio,
if you can buy things that are falling.
Yeah, it's not too bad, man. It's not too bad. And I think you might have already seen my portfolio, right?
I started looking at it after I'd done mine. Yeah, I didn't want it to influence what I was doing.
Yeah, you want to take more of my ideas. So I also have WiseTech, which is fun because last year we also had overlap with ResMed.
Yeah.
This year, I don't have ResMed.
You want a bit more leverage this year or less leveraged?
Well, last year I had GGUS, which was 2.5 times leveraged. Don't have that this year, but I do have more leverage in spread out this year. So I'll go through my positions really quickly. I've got FHNG, which I spoke about with Navarre on the podcast a few weeks ago. I've got G200.
Oh, that's hedged FANG.
Yeah, currency hedged FANG. G200, which I'll explain why when we start talking about some of the news this week. We're recording on RBA day, by the way, so that will be relevant in a minute.
Andrew Dermott up next.
Yep. G200, I said that. GNDQ, LBL, these are all listed on the ASX. LHGG, WiseTech, which I mentioned, XRF, and Xero.
This is a very leveraged portfolio.
And then my last two are the US companies, and I've got Cloudflare, which I've spoken about a couple of weeks ago, and a total wild card. The biggest wild card I could think of, to be honest, which was Duolingo. Duolingo. One of the reasons is I'm an absolute, I'm addicted to Duolingo, to be honest. I'm one of those kind of people that...
¿Qué?
Yeah.
Sí.
Porque no les dos. I'm not learning Portuguese or Spanish, but I just know that from everyone saying it on the podcast. No, I'm learning Italiano. Thank you very much.
Oh, beautiful.
Yeah. Don't ask me why. I'm also learning a bit of Vietnamese, which is, god darn, that's a hard language to learn. Anyway,
we haven't seen him 6 weeks and you're bilingual.
Yeah, that's it. I can speak Vietnamese.
Yeah.
I cannot. But I'm going to Vietnam, and I always use Duolingo. I've been using it for many, many years, but I always use it to prepare for going on holiday. I find it's a good way to kind of get in the mode, and then when I'm there, I can kind of pay some respect to the local people that may speak English.
Wouldn't you just put the AirPods in and translate, Google Translate?
Well, this is the whole thing. So Duolingo's down 75% in the last year. The actual stock.
Yeah.
Two big reasons. Apple came out with their bloody...
translating headphones.
Yeah, where you could have your AirPods and it would translate in real time someone talking to you into your language.
Just look like all the other people that have AirPods.
Which is totally amazing
all
technology.
Day.
It's incredible, right? That's the first thing. And the second thing is a bigger thing, is the whole AI kind of replicating software applications in a way like Duolingo. And if you look at even ChatGPT, the owner, which is OpenAI, came out a month ago with chatgpt.com/language.
Yeah.
And this is following their chatgpt.com/health. And the idea is that these big LLMs, these language models like ChatGPT, Gemini, Claude, etc., will eventually replicate everything that is easily replicatable in their own ecosystem. Kind of like how... You know that old saying, Drew, where it's your app is my feature, which was basically a play on Google and Apple.
Yeah.
Basically just saying, oh, cool app, we'll just do that.
Yeah.
Ourselves.
You'll bring more people to our phone.
Yeah, cool. Oh, you got a calendar app. Oh, we'll just do that in our app.
Yeah.
Oh, you got Internet Explorer? Nah, cool. We'll just do Chrome.
Yeah.
If you have an Android, you have to use Chrome. Yeah. That's the theory here. But I think habitually is what people are missing with Duolingo is it's actually got nothing to do with language. It's all about habit formation. They do chess now. I'm not betting real money on this, but
you need something in there for
I've got to have a bit of spice. I was going to go with one of the Rask portfolios.
3 leveraged holdings.
I was going to go with one of the Rask portfolios, Drew, and then I was like,
that's a core. This isn't
Everyone
your core.
Can just go to the actual website and look at those.
Core.
But my portfolio's looking shit house already. So G200's down 2%. LBL's down 2%, Lakehouse is down 3%, WiseTech's down 2.5%, XRF is down 4%. Yeah, so
tough
Duolingo's
start,
down
don't
2%.
Worry. We remember this did well. It just took us a while to get into the rhythm last year. You're leveraging again. It's always rich. You just get leverage through individual stocks.
XRF is now down 4%. So it's like
you're probably going to take over to save you anyway.
Bad start. But as we know, a year can be a long time on this podcast. So, we'll see. But I was just quickly, maybe it's worth just explaining why I use the leverage ETFs again, because it's a game and you got to win. But I learned my lesson last year by using too much leverage in the portfolio. So this year I've done G200 and GNDQ, which add 30 to 40% leverage or debt to the ASX 200
dial back your leverage
and NASDAQ 100. Yes, but because of portfolio decay, Drew, and I don't want to get into volatility decay. I don't want to get into the specifics of how derivatives work, but effectively, interest rates are mixed, which means more volatility typically in the stock market this year than last year, say, and that could mean that there's a lot of volatility decay. I won't bore everyone to death with university level 3 finance on today's show. But it's not good to have a lot of leverage in an uncertain market. Put it
Certainly
that way. Not. Laser Bond and XRF should double before the end of the year.
Yeah, you're hanging on to those ones. Just want to look for that takeover
same
offer.
As last year, they should double. If I was the only one that got a takeover offer from my portfolio last year, I'm guessing I'll probably get a few more this year.
Me too. Who knows? Think it's all round. Amazon.
Yeah, true. Yeah, never know. Amazon might get a takeover offer from Perplexity. They seem to be trying to take over everyone.
Yes.
Yeah, WiseTech, good business, as you would know. Xero also been punished recently, really punished.
All tech.
Yeah, and it's because of the whole AI disruption threat, which is very real. So we'll see what happens. Of the stocks in my actual game portfolio, I only own WiseTech at the time of recording. I wish I still owned XRF because it's 7 bags since I recommended it. And LaserBond I probably will buy again this year. Oh, actually, and I own the Lake House Fund. There you go.
Yeah.
Do you own any of the stocks that are in your portfolio?
Oh, actually, good question. I believe I own GPEQ, GQG. Yeah.
I
mean, these are all falling knives, so I've already held them. Yeah.
So there's a lot of you feeling your pain.
And a little bit of Amazon, yes, I believe. Yeah.
Okay.
So not a lot.
Yeah.
I'll probably be looking to add to fuel. I mean, and this is there's an ESG layer here too. Like if you're not comfortable in fossil fuels, this is a personal view that I think.
Yeah, Drew's very unethical.
Yeah, of course. Yeah. I think if demand for fuel is increasing and demand for LNG is increasing, but the
vote One Nation.
Yeah.
Yeah.
I always get in trouble for laughing too much, and then I probably laugh more than I ever have in 2026. So, as they say, pull your head back. There we go. We're back on.
Okay, we're back in business. Also, just a quick little update. Drew is also expanding into real estate agency services in 2026. If you're looking for a real estate agent to sell your house on TikTok, Drew is your guy. So head to, was it Waddle Partners?
Waddle Partners TikTok, yep.
Waddle Partners on TikTok.
Commandeered the D-MIDI TikTok and turned it into Waddle Partners.
Yes. So you can go and check out Drew's handiwork and how he can, I don't know, do things for your house over on TikTok. And
I was advised on the format it should take. These were not personal choices. I'll put that disclaimer in there.
I wish I could put some sound through the old keyboard, but I can't. But
let's just say I'm not an actor.
You'll have to check it out because we don't have all the fancy widgets in the studio today.
More to see here. More to come.
More to come.
Yeah, exciting times.
Yeah,
TikTok.
and also the Waddle Partners YouTube channel, which is much more wholesome these days than it used to be. Just a bunch of spam bots trying to promote crypto trading and whatever.
Not the content, the spam bots.
Actually, in the comments, we were reading the comments earlier on, and it's very wholesome.
Yes.
Yeah.
I got to get on top of that this week too. I'll respond to everyone as I always do.
Some of them have like 100, 200 comments on the videos. That's a lot. There's a lot going on. So that's Waddle Partners for you. Bring in the wholesome.
All things concessional contributions, super changes, retirement mistakes.
So the Golden Times. Tell us more about this.
So the Golden Times was a publication that was run by the Insight Network. So I think you've spoken to Jamie about that before. Focused on providing interesting content to retirees.
Yep.
So I've just taken over running the content, the articles, and made it into hopefully an engaging weekly email, maybe similar to yourself, but topics du jour. So interesting topics.
Well, it's also written in French.
Links to other. I've been on Duolingo too. Links to other articles that are relevant. So not just a lot of publications just link to their own articles. So linking to some external articles. There's probably some paywalls there, and make sure people are up to date with all those things. So what's happened with the retirement standard? Cool. How much does it cost to retire? And then some of my own produced stuff as well.
Cool. So you've got people can reach you on YouTube, TikTok, and thegoldentimes.com.au.
Yeah.
Cool. That's great. And obviously there's Waddle for actual clients of Waddle Partners, it's waddlepartners.com.au.
Yeah, exactly.
Yeah, cool. Okay, that's great.
Something fun.
So that's great, mate. I can see why you're so tanned. You want to get more of this content out. I really like it. So
it's 32 degrees when I filmed that TikTok content. It was so hot.
Really?
And they'd be walking up and down the stairs 6 times.
Wow. Yeah.
It was a tough one.
Get a real look into Drew's life and his Miele appliances in the Waddle Partners latest content on TikTok. So in all seriousness, we are not very serious, but we have some news this week. We are recording a couple of hours before, what's his name? Jerome Powell, in charge of the Australian RBA.
That could be his new job, yeah.
Yeah. He's applied. But seriously, there is pretty major economic news from a central bank perspective. So from the economy as a whole and the people that set interest rates are the central banks. Here in Australia, Drew, we just checked. Interest rates are predicted to go up today.
Yeah.
We don't know. So we're recording this in advance. We should just record 2 episodes of the podcast.
I know.
So Dr. Andrew Dermot, which is Drew's alter ego here, has been closeted for a few years, but he's finally come out and he's now making another prediction.
So I pre-prepared the Golden Times for this week on the basis that rates are held. And I'll have to adjust it if that changes at 2 o'clock this afternoon.
So
I just can't.
But okay,
I don't
so
understand.
for context, in the market, the way we can get a prediction of what other investors are thinking is through what we call the money market or the bond market.
Bond yield.
And the current expectations based on the bond market for interest rates in Australia at the time of recording There's 80% chance of an increase today to 3.85% in the official interest rate.
But this was saying in December last year, let alone like 2 weeks ago, it was saying, I think it was 75% chance for hold. So these percentages swing around on a daily basis.
They do.
And any type of, so basically CPI data came out on the 21st of January or thereabouts, and the whole thing changed. So quarterly data, inflation was 3.8 or 3.4 seasonally adjusted, whatever that means, annualized, it was 28%.
I think that's, that's Chris Joy, sorry.
But basically the cost of housing's gone up, which, I'm pretty sure there's some data on that too. Wherever you go, the cost of housing's gone up. And a lot of it was driven by an increase in electricity prices. And I'm sure that was a roll-off of some rebates last year. I'm not exactly sure why it went up so much. But it seems very short-sighted to have one reasonably big but furphy inflation, let's call it a furphy. And inflation data, and then hike by 25 basis points immediately after, 2 weeks after you get one piece of inflation data. I feel like you need more convincing before you're ready to do that. Particularly, you put a hedged FANG position in, particularly given the Australian dollar's at a 3-year high. It's back to 71 cents.
Is it really?
So the Australian dollar...
Time to go to Vegas. Yeah, here we go.
You can get out of Australia again.
Yeah, let's do it. Yeah.
But
everyone's going to Japan.
That's bad. Higher Australia, if we continue to, bad for exporters anyway, and we are an export-driven economy, if we increase rates and the differential between us and the US narrows or we increase and it gets bigger, the value of the Australian dollar by nature should start increasing even further.
Which it already
could put
has.
A handbrake on the economy.
Because of expectations.
That's what I think will make the RBA hold.
Because you think that if our interest rate, the way it works for folks that don't understand, is the country with the higher interest rates, assuming they're both stable democracies, which they kind of are.
Which one are you talking about?
Imagine if it was like Pauline and Trump trying to negotiate. Yeah. Well, they probably see eye to eye, maybe. I don't know. Who knows? I'm not into politics or whatever.
They'd actually probably go all right.
They'd probably get on.
Me too. Yeah. Go on.
Yeah. Make Australia, make it, America, whatever. Anyway, so if
we don't go to politics,
if the difference is too high or too low between the two countries, basically money flows to the country with the higher interest rates. Yeah. And that then pushes up the currency where the money is going. Yeah. In this case, Australia is predicted to increase interest rates, where the US is kind of mixed with, Trump making suggestions of the new governor, and that's why we saw all the commodities absolutely implode last week. Yeah. So all these things are inputs into this one prediction of what the RBA will or won't do and what they actually do. No one knows for sure. But you're saying that if interest rates, sorry, not you, but Dr. Andrew Dermuth is saying that if they did lift rates today.
Yeah, and predicted another 2 times this year.
Yeah, until over 4% of the official rate.
Yeah.
Bit of educational trivia for people also playing along at home, and I'll make my point in a second, is that if you take the rate that we're talking about, which is the official government rate from the RBA, add 2% to that, and that's your mortgage. That's effectively where your mortgage should be. So anyway, expectations is it will go over 4.1% by the end of the year. But if they did do that, you're saying the currency would rally even further than it has already, which would then make exports less valuable because they're getting US dollars in return.
More than 2/3 of our economy.
Yeah. And then also that would increase our buying power in Australia, which would probably lower inflation. Yeah. Is that your prediction?
I think so.
Because Australians with a stronger dollar could buy from China,
like an automatic
buy from places, and it would be less impactful on their budgets.
Macroeconomics. I think we studied that at uni, didn't we?
I don't know.
Automatic stabilizers. That when currency, the currency is an automatic stabilizer for the economy. Every time there's been a crisis overseas, the Australian dollar's tanked, which has protected our economy. Yeah. Not protect us from traveling, but protect our economy generally. But there's one caveat, proviso to this, and I included this in the notes, which has been the performance of residential property over the last 12 months.
Yes, you did. And I didn't actually see the official numbers official, who knows? But I didn't see the numbers until you shared them, which is quite crazy to me.
It is, yeah. So just in price growth to 12 months to January 2026, the average national is up 9.4%.
Yeah.
And it's front-ended, and you can see this. Brisbane up more than 15%, Perth up more than 18%, Darwin up more than 19%, Sydney and Melbourne up 6% and 5% respectively.
Still huge.
That's still massive. Like yield's obviously much lower. That's an interesting. I always get that interesting takeaway out of here. It's like 3.5, 3.1% in income on average when you look at the total return, but 13% from property over January to January 2026 over 12 months. While median house value is now $900,000. Like it's very difficult environment to be a first home buyer. I don't know how this is adding to inflation. I think that's the problem. So you increase you increase interest rates, you send property prices lower, people spend less, you tease a recession, you increase the currency at the same time. Who knows? I hate to be in that job at the moment.
Yeah, it's tricky. But one thing that would help is if they let more people buy property.
Yeah.
Like everyone
lend more to more people? More leverage?
More property. That seems to be good. Like if we go by the Honourable Anthony Albanese's strategy of 2025 is just make it easier for people to spend more on property.
Yeah.
She'll be right.
Use their super. Why not?
Use their super, but then also give them a 5% deposit scheme. Yeah. And you know what? There's a magical ceiling in most cities, which is 950,000.
Yeah.
So here's my prediction. You're saying that the national average value is $910,000. Yeah. Still got 40,000 to go. Yeah. Keep pushing everyone.
There and then done.
Get your kids to buy more properties. Hand them some money. Yeah, pump it up.
9.5 plus stamp duties under $1 million. Is that why? Yeah.
Well, so the actual limit in, like, say, for example, Melbourne, I think Brizzy's a little bit higher. Sydney's 1 million.
Yeah.
But you can buy a house for with 5%. A 5% deposit, and the government will back you in and say, "Don't worry, I got you. I'll take care of the lender's mortgage insurance. You take the 95% loan. I'll cover the cost of the insurance."
So like Fannie Mae and Freddie Mac, is that what they did?
Hey,
is that what Fannie Mae and Freddie Mac did?
No, they did
mortgages off banks to free them up.
Yeah. I don't think Freddie Mac and whatever the bloody Fannie Mae knew what they were, and no one in that building knew what they were doing. Similar to Lehman. They didn't know. And yeah, ultimately, I don't know, did these, it's a bit conspiratorial by me, Drew, but I read the Treasury paper on what they thought the impact would be from that 5% deposit scheme. And they said it would result in an increase of 0.5% the value of housing stock.
So 13% in 12 months.
0.5%. I don't know about you, but in this last 3 to 6 months of the year, you can see it here in some of the prices. Like just in the quarter alone, Brisbane went up 5%.
Yeah.
It was obvious, and obviously it was a massive misdirection by the government, but I don't know. I felt like this increase was very much expected.
Yeah.
Don't you? Like a 10% increase in property prices when you
everyone predicts it.
Telling everyone to go and buy more property would...
And not adding to supply at all.
Yeah,
throwing some kerosene on a fire that's already going, particularly in 3 cities.
Yeah.
Like, maybe people will move back to Melbourne and Sydney now, or Melbourne preferably.
Well, this is this. I don't know how closely you looked at the first, because I know you don't mainly deal with retirees, but I don't know how closely you look at it. But my biggest gripe with this was that you could be, if you're a first home buyer in Sydney, you could buy up to 1.5 million with the first home deposit scheme. The problem with that is that if you're in Sydney with 1.5 million, then you could buy...
You get a 1-bedroom studio.
Yeah, well, you could buy just a shit heap really for that. But you could then, after a few years, sell that house and buy in Melbourne.
Use it leverage,
and you've got way more borrow... Like you've got this kind of equity value, presumably, where you can only do 950. So it kind of meant that there was inequality between cities in a massive way.
Do you do Instagram ads about rent vesting or anything?
No, I don't. I don't do Instagram. Yeah. Instagram, I don't know. It's a very visual platform, and I've kind of given up on that. What I mean by that is I've given up on being visual. Anyway, what else is making news other than we don't know about interest rates, but actually, no, good segue to the FANG holding. So I said I would say why I went FANG currency hedged. Over the last 5 years, the FANG ETF, which Drew owns, has been his single greatest investment of all time. Some daylight and then his kids. But the FANG ETF has done very well. The sister of the FANG ETF is the same ETF but with currency hedging. That's FHNQ. That outperformed in 2015. It beat the FANG equivalent. And the reason is currency. Simultaneously to all this happening, the FANG ETF, which owns 10 big US tech stocks like Google, Amazon, that sort of stuff. What we saw in the fundamental data is that the real reason the FANG stocks have done so well, the Mag 7 as they're sometimes called, the real reason they've done well is through earnings expansion. They've got more profits, more and more and more profits. People think that they've gone up in stock price simply because they've gone up, that their valuation is higher. That's not actually true. It's, if you look at the drivers of the stock price, it's actually the growth in the earnings. So the E in price earnings ratio.
Well, that's like Microsoft just tanked 11%, but I mean, that's probably not good for your portfolio. But sales increased 17% for Microsoft in a quarter.
Yeah,
and the cloud was up 38%, and they thought that was slowing.
They're unstoppable.
Cloud growth at 38%.
The old antitrust rules don't apply.
Yeah.
When your government is saying you need to beat China, I will do whatever it takes to make sure that you beat China. Yeah. There are no antitrust rules.
Is the US again? Yeah, that's fine.
Oh yeah, no, yeah. I don't know what I'm talking about.
But Apple just prints cash. Like it just has is it something like 40 billion cash in a quarter? It just has so much cash. It's ridiculous. It's that profitable.
It's pretty simple geopolitics as far as I'm concerned. Yeah. The US cannot win a manufacturing war, which is, for people that are students of war, you will know that the manufacturing capacity is what enables countries to win wars.
Yeah.
And the US cannot win. So it has to win on intellectual property. That's why it needs more satellites in space.
Computing power.
And it needs more AI, more data centers.
More air compressors.
More air compressors.
Jesus Christ. You just wait.
Okay, yeah, it just ran thing.
That was a finger really wobble there. Watch that one. They don't come out very often.
We'll look back to my point about FHNG, which is that by neutralizing the currency impact, which we just talked about, the Australian dollar is really powering ahead. And if the local government here in Australia, the local RBA, the Reserve Central Bank, continues to lift interest rates while the US is not doing that, we will see our currency go way up.
Yeah.
And that is why you'd want to hold a currency hedged position, not FANG.
And go to Europe.
Go on holidays.
Yeah.
Yeah, but you would.
Imagine if it was $1.10 again. Do you remember what it was like when it was $1.10?
Can you imagine if the Australian dollar got back to parity with the US?
That would be.
If we got back to parity, I would be piling all of my money straight into the United States.
I'd just be moving there for a year.
Yeah,
spend that money.
I just remember when this is going to sound like I'm a punce, but back when I was over in Europe not too long ago, I was like, God damn, these Americans, like, we all know American tourists, what they're like, but I was like, God damn, these Americans, they got like 30% more purchasing power than me. You know, here we are in Europe, and I'm like, they're able. This cheeseburger costs nothing to them, right? And for us, I'm like, I'm poor here. I can't even buy food. You know what I'm saying? And now we could be back. We're back, baby.
Hopefully.
Yeah.
Who knows what that would be like? You know, we'd be living like kings again.
Yeah.
Imports would be cheap. Always, we just import everything. Why would we ever export it? Just import it all.
You know, this actually reminds me of the great risk to the blind index fund investing trend that we've seen over the past 20 years is people that haven't been investing since, say, 2010 or even a little bit earlier, you would not know what it's like to invest overseas into a rising Australian dollar. No. And we saw that.
Or a falling market.
In the lead up to the GFC and just post the GFC. And not only that, we also saw the American stock market really struggle in the 2000s. People don't know what that's like.
Yeah.
And that is a very real reality. And so using things like a bit of currency hedging and all that is really important. Obviously, you want to have a diversified portfolio generally.
That's why fixed income is almost always hedged whenever you buy a fixed income ETF as well.
Oh, yeah. You got to have, hedge. But remember, like 5 years ago, 10 years ago, basically any time from, say, 2014, say, for those of you that have been investing as long as we have, through to, say, 2023, that 9 or 10 year period, every major economist, every professional investor, every thinker was like, the world will explode if we had 4% interest rates again. Remember everyone? How scared they were? They were saying interest rates will never get back to 3 or 4%. It's not possible. Government debt, all this stuff. Remember that?
Yeah. We hear this all the time.
And now
money printing. You know, QE is going to end the economy. Yeah. Everything's going to explode. Gold
debasement.
Yeah.
Like, look at us.
Yeah. We're fine. What was I saw my resolution for one of my learnings from last year. It's lean into optimism. Not that hard. Like lean into positive. It could go the other way.
Yeah.
Maybe we can deal with higher interest rates.
Yeah. So the big, I think that the big thing that was making people scared of interest rates back then is obviously the world is indebted personally, like as household budgets and government budgets are indebted, which could lead to hyperinflation.
Yeah.
Which is what, to be honest, the debasement fears around Bitcoin and gold and that sort of stuff is kind of true.
I think it's also a momentum trade too.
It is a bit.
So much. Look at it. Look what happened over the weekend.
That said, like the things have got more expensive in Australian pesos.
Yeah.
Like they have. Like
that's our own issue because we have no productivity in 30 years.
Well,
that's our bigger problem in Australia.
Yeah. And that, again, if we come back to geopolitics, I'm sorry that I'm labouring on this. I've been calling this out for like 3 years. But I was thinking about this in the lead up to today's episode. I reckon Australia, technologically, is 30 years behind the United States now. I think we used to be 10 to 15 years. I think we're more like 30
Some areas
years
we're
behind.
right, but in a lot of areas we're well behind.
In consumer tech and stuff, obviously, whatever. But it's not... The problem with productivity and technological innovation is that you're catching a moving target. And it's not as simple as, we'll just try and build our own operating system, like Brazil tried to, or China's pushed it and they've been successful with their own operating systems and these types of things. But it's the infrastructure around the technology. Yeah. So you can't just pick up like a TSMC or an NVIDIA foundry or something like this and go, now we're going to build it in Canberra.
Yeah.
You can build the factory.
There's a little space.
The government can build the factory, no problems. You can pour concrete. Yeah. I'm sure we've got great tradies
Everyone's
out there.
Doing that. Everyone's doing it. Everyone's doing it, yeah.
But try putting like Hopper GPUs from NVIDIA built in a foundry that's like dustless.
It'll take us 6 years.
Yeah, and then...
You know why? Dustless?
Rand.
Air compressors.
Air compressors. Far out. It all comes back to air compressors. This is like the great locusts of the Egyptian era. Like this is... Everything comes back to air compressors.
Small enough stock, I could talk it up.
35
bill, who knows?
With your scale, you could do it, get on TikTok.
I thought and I picked this up from our friends over at Ritholtz, listening to them during the week. I thought it was quite interesting. You're going on geopolitics, government debt, all those kind of stories. I thought it was interesting. US government debt, 124% of GDP. So massive, and everyone's worried about it. And it's been increasing forever and hasn't really had much of an impact. Aussie, only 43%. Of GDP. I also find it weird that you measure it against GDP, but that's an annual GDP figure. So you're measuring your debt against 1 year of your economy, not like all the assets that your country owns, if that makes sense.
Yeah, it does. Yeah.
But interestingly, and this was their message, not necessarily mine, I haven't come up with this independently, is that private debt, so like household debt, is actually falling. It's fallen from 82% to 10% as a percentage of GDP as well. And in the US, it's been even more significant. So it's not like debt's just blowing up everywhere. Governments are taking on more debt. Households have deleveraged. I guess asset prices have gone up at the same time, which has helped.
Yep.
I thought that was a super interesting kind of insight into broader trends.
So just confirming I understand this, is that their insight was that as a percentage, we're dealing with percentages here.
Hyper-focused on debt.
Yeah, but the government's taken more debt. Households, as a percentage of their assets, are less indebted.
Yeah. I mean, this is also as a percentage of GDP, which is quite interesting as well.
Okay.
So just generally, household debt has been reducing, whereas you'd assume that everyone's leveraging more because mortgages are more, houses are more, all those sort of things, but it's actually quite the opposite, that household debt's actually been reducing over the last 10 years and governments have been leveraging. I thought that is
very interesting.
That's why consumption's still there. It's why inflation's still there. It's why economies are solid, whereas people expect it to be the opposite.
Yeah. That is fascinating. It is fascinating. I just think like you know how I constantly try and say to folks is to try and lean into the optimism, be optimistic, like you're saying. It's like cautious optimism as well.
Yeah, you don't just go for it. Yeah, come on.
So there's some shit that's wrong in the system. Let's be honest.
You call that out.
There's a lot and here in Australia in particular, we as finance folk, we love assets, liabilities, balance sheets, income statements, blah, blah, blah. But there's this whole mush in between, which is like the human and societal impact of all of this. And there is a lot of, I would say Australia and the US in particular, there's a lot of Australians that are struggling, and a lot of the economic surplus is going to places that it shouldn't go, and to people maybe that shouldn't have it. And the biggest one is property owners.
Yeah.
I'm going to go out and say this, that property owners do not deserve the value that is accruing to them.
Yeah.
Because what it is, it's not designed for that. And that is a very contentious thing to say in Australia. But it is.
Put that on your YouTube. This will be interesting. Yeah.
What's the hate? But it's true. It's not a productive asset.
Yeah. It's a depreciating asset.
So the problem that we will have as a society, and that's where it comes back to this whole being behind in technology and innovation stuff, is that we are pouring more money into something that is not productive.
Yeah.
Longer term. It's productive in the short term for people's personal wealths, but longer term, it's a real issue.
It just runs on scarcity, and there's not enough supply, and immigration is quite high compared to the supply of housing.
Yeah, definitely. They're all like the symptoms, right?
It continues to do 20%.
Yeah, so here we are. But we're optimistic. So Cautious. What else is more optimistic? Like if you were going to give us some good news, what's good news?
Tech firms just did exceptionally well. You've got more options than you ever. I remember 3 years ago we sat here and said this is the best time you could possibly invest.
Yeah,
and it's still not bad. Yeah. Like you can find any data that shows the cyclically adjusted PE ratio is expensive, but that doesn't account for Microsoft growing cloud at 36%. Yeah. Like it's got and the step changes that are occurring.
Yeah,
I found Tesla's announcement. I mean, not Tesla. Elon's announcement pretty interesting.
Which one was that?
Which was basically giving up on cars, or not quite, but pivoting heavily to robotaxis, batteries,
pulling back out of S and X, the two models. Yeah,
exactly.
The more expensive Teslas are being cut from the US.
Exactly.
Yeah.
I thought that was super interesting. And then I realized that...
But they have tested that theory, just for people that don't understand. The S and the X are the more expensive models of Teslas, and they've already been cut. Like here in Australia, we haven't had them for years.
Or the Cybertruck.
Years. Yeah.
You're waiting for your Cybertruck. So.
I'm still waiting for my truck. Yeah. But they're basically taking that manufacturing capacity and pushing it into robotics.
And another one was, does Meta have an AI product?
Yeah, it's called Llama.
What does it do?
It's a similar thing to ChatGPT.
Oh, it is. It does have
Except it's about 400 kilometers behind the start line.
Yeah. So I didn't even realize if they had a product or not, because they're talking about investing 135 billion US into capex for this year to expand.
Is that how much they're spending?
Yeah.
Wow.
And it's a 60% increase. 80%. It's something ridiculous.
I feel this is a very nuanced
I have not ever heard anyone say Llama before.
Yeah. So if you go into your popular social media apps like WhatsApp, Facebook Messenger, or what's the other one? Instagram, and you type in something at the top of the page and you start to search for something, and it gives you smart insights, AI stuff. That's all driven by Llama.
Llama comes up.
And the thing that's also really interesting is like the platform X, formerly Twitter, and now Google search with the Gemini, is everything that you used to see in a search function, so say in your browser at the top, or when you Googled something, or when you're on your social media and you're searching for what was your ex-girlfriend's name when you're 13 years old and what's she doing on Facebook now? Something like
Llama. That's what Llama's for.
Now, that's intercepted by an AI algorithm.
Llama.
And so when you put that query in, it's being caught by AI, interpreted, and then the results are shown to you. Whereas in the past, it would basically use algorithms to match every character as you're typing to its database and then present search results. The benefit of this is that when you do that, it's contextual and it adds value to the search and adds value to the platform. But importantly, for things like Facebook, is it then will know what you're up to and it will start putting ads in front of you. So,
it was just doubling down on its ads. I was like, oh, okay, yep. You've done really well on ads.
So, sure. Facebook and whatever would love, like all of them would love to win the AI race.
Yeah.
But if they're not in the race, even their existing platform will struggle.
The story about the tortoise and the hare, so who knows?
Yeah. Actually, Ren from Equity Mates is coming in this week, and he bet me a 6-pack that...
of Beaky or...
alcohol, beer. He bet me a 6-pack that Meta/Facebook would never get to $1 trillion. Well, guess what? 1.8 trillion now.
You're drinking that on air?
Yeah, he's coming in, so we'll crack a beer. But drink responsibly. But it's really interesting. Tesla pushing into robotics is quite interesting. Yeah. For those that don't know, so Tesla's separate to SpaceX, which is where the majority of Elon's wealth comes from, actually. nowadays. But SpaceX is also building the same style of manufacturing plant for Starship.
Yeah.
I don't know. Did you see that?
Yeah.
So Starship is a rocket ship that will hopefully go to Mars. And it is bigger than a soccer field, to put it in context for you. And they've tried to take like this factory and then make it so that they can make thousands of Starships.
Yeah.
So that you would have effectively the Uber of Mars.
Yeah.
So you could go to space repeatedly on the rockets and connect to Mars.
So it's like for all mankind in the real world.
Yeah.
Like it's basically, and if you watch that show, you know why they're trying to get to Mars.
Yeah. Well, there's a lot of things. Yeah. So that's cool. Apple's revenue jumped according to Drew. House prices jumped.
The iPhone 17 Pro Max.
Yeah. Did you get it? Did you?
So right here.
Wow.
Computing on the edge, exceptionally well. Yeah, still not great AI, but they were called out for that. I mean, the only other interesting thing would be the amount of conversations I had about buying silver in like the last 6 weeks. People contacting, asking questions, silver, because the thing doubled in like a matter of 3 weeks. And then on Friday, you saw, so gold fell from 7,800 Aussie to 6,700 in 3 days. Silver fell from $170 to $125 in 3 days as well. It was like, and all I said at the time was, I think gold has an important role to play. Everyone talks about silver. I assume there's a use in phones or something, but not necessarily the same level as the way gold's used it for a consumer product. It was like, this is feeling at this point like an incredibly powerful momentum trade. And it's not a time to be significantly adding to your position or adding new positions right before it fell, 10-30%.
So you're saying that you...
Did you record me?
No, I've got something to show. But you're saying that you are both a genius and silver is a fool's errand.
Yeah, sure. Your words, not mine.
No, so
it's
buy, hold, sell silver. Buy, hold, sell silver.
Sell.
Okay. Buy, hold, sell gold.
Hold.
Okay, fair enough. I agree.
Yeah, it's kind of so. But this is momentum. You like if I can't work out where not where the peak is and that it's at a peak and it's going to fall, but that momentum has taken over the trading in something in 20 years in the industry. Surely you've got an idea of when momentum's taken over, as opposed to just we've got to get into gold. We've got to get into silver now. It's up 400% in 3 years.
I don't know. I allowed our community to buy Bitcoin on our investment platform last year, and then it fell 30%. That took me so many years to get over that. I was like, whatever.
Clearly still haven't.
They can have up to 5% in, Bitcoin. Let's be clear, Bitcoin only. But anyway, so as you were saying that, I was reminded of something that I was going to send you from Instagram, which I just found via Llama, believe it or not. And it was it's from an account called Day Trading, and I'll see if I can turn it up for you.
It's your lucky day today. You win a free 10-ounce silver bar, pure silver bullion, or a free Hershey's king size chocolate bar.
Take this one.
You'll take the chocolate bar. Who needs a 10-ounce bar of silver? Right? Have a good day. It's your choice. A free 10-ounce bar of silver bullion or a free king size Hershey bar.
I think I'll take the Hershey bar.
Go ahead. It's your lucky day. Just fresh out of the refrigerator.
Thank you.
Thank you very much. Who needs a 10-ounce bar of silver when you can have a good, delicious bar of chocolate, right?
Yeah, exactly.
Okay. All right, thank you.
Thank you.
You'd rather have the Hershey bar than the silver bar?
Yes, I would.
Oh, you would?
Yeah,
Okay.
the Hershey bar.
So the average intelligence of people that buy silver or that don't understand what it actually is for or whatever is very well encapsulated.
I take the Hershey bar too.
To make it even more fun, that video was actually recorded outside a silver mint in the United States. And he said, you could just go in. He even asked people, he said, you could go in and see how much this is worth if you want to. And they would still take the chocolate.
Take the Hershey.
Anyway, we've probably got time for no questions.
No, we're back with questions.
We will be back next week with questions. But my question for you as maybe a way to end the show, and seriously, we would love your questions for next week. You can write them in via the link in your show notes. Also, if you have a very strong disagreement with my call about house prices, I would love to hear it. You can head to youtube.com/Waddle Partners and just put it in the comments there. Thank you very much. But for real questions, hit the link in your podcast player. And we would love to answer them. Remember, more banter, the better. The question that I have for you is something that you just said before, which is in 2023, I think it was, we came on here in January.
Geniuses. Geniuses.
And we said that we think that this is potentially the best time of our careers to be investing.
Yeah.
You alluded to that just before. We are basically at the same time in 2026.
And we weren't just trying to get headlines.
No, we didn't. It didn't work.
No.
So where are we
Fear
now?
works.
Do you feel as optimistic, less optimistic, about the same? What do you think?
I'm not as optimistic as I was at that point, but I'm still, let's call it cautiously optimistic.
Cautiously
Like if
optimistic.
you're on a 5 to 10 scale, I'm probably like a 7. We're at a 10 then. 10.
Wait,
we're at 10. If we were at
we're on a
10 in
5 to
2023.
10 scale.
1 to 10. 1 to 10 scale.
1 to 10.
Sorry.
Okay, so and you
5's
are
the
what?
middle. 5's neutral.
5's neutral. 1's
0's
negative.
negative. Yeah. Then I'd say we're like a 6 or a 7. A 7.
6 or 7. Okay, well, that's pretty good.
Like you still got, even if interest rates are held, you've got pretty good returns from cash. You can see property has done well, whether it continues to do well. You get reasonable results from, buying bonds. You're getting 4.5 to 5%.
Yep.
Equities, yes, there's some overvalued parts of the market, but there's some seriously cheap parts of the market, sector-wise, company-wise.
Yep.
I think you should be cautiously optimistic at the moment, and don't be afraid to be stepping in at points like this.
Cool. I agree. I'm very optimistic. I think it's always nuanced, as you would say.
Your portfolio's full of leverage, so I hope you're optimistic.
Yeah, boy. Bring the debt. Regardless of what the RBA does today, your money has to go somewhere.
Yeah.
A lot of people, I noticed one person, one sad victim in the YouTube comments of Waddle Partners actually said that they were 100% cash to remain liquid, which is pretty common in the YouTube comments. I'm not going to lie, for any of us.
It's either that or crypto.
Yeah. But your money should go somewhere, and by putting it all into cash, it might feel safe and because it's familiar, but it's actually almost always not the right move to make. For example, that person could probably just buy, floating rate bonds or private credit, or at least a term deposit, rather than just having it in a savings account. Dividend stocks versus growth stocks. There's so many different things you can do, gold, etc. I'm pretty optimistic about a diversified portfolio. One thing that I'm very mindful of is probably having too much just US tech that's unhedged, because I just think it might be
basically
uncertain.
having too much IVV or
we still own all
VGS.
those, but just being mindful of that.
Yeah.
I think, like you said, I love it when you bring the optimism to the show and the perspective. The Aussie tech stocks have been absolutely whacked, haven't they?
Yeah.
What a great time to be thinking about those stocks, putting them on your watch list, so on and so forth. Now, as we end the show, we do like dad jokes. Did you prepare one, or do you not?
I
have one?
did have one this week.
Drew is actually taking requests. Apparently, it is now unfashionable to be caught emailing the wrong person. But you can email Drew your dad joke suggestions at drew@bottlepartners.com.au. Just keep a record of it, is what I would say. Drew, what have you got for us?
I'm reading a book about anti-gravity. Mm-hmm. It's impossible to put down.
That's pretty good.
Yeah, I'll take
it
that
ties in with our space talk
exactly.
before.
We've done it.
This is really good.
Bring it all
well, Drew Meredith, Waddle Partners financial advisor. You can get in touch with the team at waddlepartners.com.au. You can also find a link in your podcast player for financial planning and a bunch of other resources. If you haven't checked out the Rask Value Investor Program, if you love diving deep into companies, that will teach you everything you need to know about value investing, and it's free. It's available on the Rask websites as well. Drew, thanks for joining me.
Good to see you.
Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel, or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.